Here in 5 minutes, this is a price action in 5 minutes here. Remember, we this was 1 hour, so we are here in 5 minutes now to see the price action here. You can see we have been consolidating here in 5 minutes. This is a consolidation, up and down, back and forth movement, back and forth. It's called consolidation, time distortion, time distortion. So when this kind of thing is happening, you see this kind of thing occur in the marketplace, maybe in a live chart, you don't need to enter trade. You have to wait for this to break above or break below. Then the fair value gap, once e break above, there must be a fair value gap it will create. See the fair value gap here. It happens every day, every week, and it won't stop. You understand?
Yeah.
Yeah, after a consolidation phase like this, price consolidating, it, it, it can occur at the pre-moon level. Here is a discount level, down, pre-moon, up. You can see such thing occur in the pre-moon level up too. So wait for price to break out of the range. Here is a range. Like this now, we break out of it, took out this high here inside the range. This is the up close candle, the last up close candle inside the range. You measure from this high, this candle here, the high of it to the low. This is the up close candle. It's higher than this. This is the high that created the range. It's just the wick, but the body here is higher than this. So we close above the high of the range, we break above it and close above, then created a fair value gap. Here is a fair value gap. And here was our 15 minutes order block, last close candle, right? This here, let me go back to show you. This candle, 15 minutes order block, last close candle, last close candle. So it stands as our order block. Is the last close candle here. It's lower than all this candle. So it starts from the opening. We open, bearish candle opens from up, then close down. Then we see a bullish candle that covered it, that trade and cover it. We took it off at the low, then took it off at the high, which stands as order block. Price, no other candle traded below it. So we're utilizing it as our order block. Here is our 15 minutes order block. Note that. So over to 5 minutes. So here in our 5 minutes, you can see a consolidation phase, time distortion. So when you see this kind of consolidation in the marketplace in a live chart, you don't need to enter trade, maybe start scratching your head. Just have patience to see a breakout that will create a fair value gap. Then once that happen, wait for price to trade inside the fair value gap. Then you can target the draw on liquidity. Where is the draw on liquidity here? You can target this a high buy side liquidity. You can target this high here to take your partial first profit. You can see we traded up to that and took it off. Hope you are with me.
Yeah.
Good. Note what I said here. During a consolidation, wait for price for a candle to break above and close above out of the range. This is the candle that closed out of the range. This is the candle. Then the next candle created a fair value gap, which is this yellow bars inefficiency. Is always valid. So you can utilize the fair value gap here. You can see it closed here too. The body closed at the high of the range. The high of the range. You can see it. The body will tell you the story. Why the wick will do the damage. Here is the candle that break above out of the range. And here turns to our breaker. This candle here, this last up close candle, is our breaker. Have you seen?
Yeah.
So it's inside the breaker, all this movement stop. They didn't no the wick can does the damage like this. Now you can see you might think price is coming down, but wait for it to close. You see the body close at the up, it not close outside the breaker. Same thing with this. Here turns our breaker, breaker block. That's the BB, breaker block. So you can if you miss this target here, you can enter here, you can re-enter here, then put your stop loss here. If you are scared, you can put your stop loss here. Then when price move out like this, you take your stop loss to break even. Break even is like where you enter market. If price should move in profit, then you take your profit, your stop loss, place it at the break even. That's the exact place you enter trade. That's break even. Okay. You can see here we traded and seek for the high, for the liquidity, opposing liquidity, because we took out this liquidity here in 1 hour. So here in five
But your
minutes.
voice was breaking.
Okay, you can hear me now.
The break even.
You can hear me now.
Yeah, yeah,
Okay, I say break even. Assuming you entered here now, when this candle here close here in the live chart, you understand? You
yeah,
entered here, yeah, and your target is here at the draw on liquidity. That's the buy side resting above. So if you entered here and put your stop loss around here, once price move out of your break even, the place you enter trade, and move in profit, you can take your stop loss that you place here, then put it at the place you enter trade. When you do that, you are risk free. Even sorry, even when price go against you and come back, you are not going to lose, you are not going to win. It's just 50-50 if you put your stop loss at the break even. You understand?
yeah,
Yeah, you will not lose, you will not win. You just 50-50. You will come out with the same money you enter trade with. Then when you move in profit, higher profit, you can come over here and put it here. That you are securing partial. You are securing partial. If price come against you, you are in profit. Okay?
yeah.
Yeah, good. So here in 5 minutes, down in 1 minute. This is how you analyze your market from higher time frame to lower time frame. So you see price action clearly before e plays out in higher time frame. Lower time frame will help you a lot. See where price is going first. See the price action. You can see here in 1 minute, you are in 1 minute chart. You will not be bold like that in 5 minutes. Same consolidation in 1 minute, but If you know what you are doing, you can make money here too. Here is a fair value gap. You can enter here. Here is a fair value gap. If you know what you are doing.
I'm not seeing it clearly.
Are you seeing it now?
Yeah.
Yeah. If you know what you are doing, here is a fair value gap. You can see it's a break of structure. High, low, higher high. We break this low here. This ICT 2022 model. We have a high. This candle is high. This bearish candle at the middle. Hold on. This bullish candle is a high. Bearish candle, low. Then we had a higher high. Then we had a candle that took off this low here, creating a fair value gap here. Are you seeing it?
Yeah.
Yeah. This is 2022 model. Since we have a target, you can target this low, draw on liquidity, enter here. Once you see this candle close, you have to allow the first candle to close inside a fair value gap. Then you can enter the second. Then you can take profit at the draw on liquidity. This is the draw on liquidity. The next draw on liquidity, the set side liquidity here. You can see the movement went straight. You have made money from here to here if you know what you are doing. But as a new student, I will not advise you now to be trading inside a range. You understand? It might confuse you inside a range. This is a range. You can see how it has been consolidating. You can see here is a range between this high here and this low. It's a range, but you can still make money inside it. It's not that you cannot make money inside it, but it's known as a range. Okay.
Yeah.
Yeah, if you know what you are doing, you will make money inside it. So in here in 1 minute, here was our 5 minutes fair value gap after breaking above the high of the range. Here was our 5 minutes. Now in 1 minute, we had another fair value gap here, a little fair value gap. In 5 minutes, we saw the body close around the inside the 50% of the fair value gap, and we had a wick. Here in 1 minute, this is the wick, the price reaction of the wick. You understand? Hello?
Yeah.
Yeah, in 5 minutes we saw that the body closed inside the fair value gap 50% and left a wick. So in here in 1 minute, this is the price action in 1 minute of that wick. So it deliver inside a fair value gap too, to taking out this low here. We took out the low. Then after taking the low, we seek for high. That's price action. That's what the algo will do. Then we come again to take out this low here too. Then here is an inversion fair value gap. How to utilize it. Here now, between this candle and this candle, there is a gap there. We have violated it. This candle violated it. It close and break above it, close and break above it, break and close above it. Then price coming back to it to refill it. It now stand as a support level. Inversion fair value gap. So this is you can utilize this how you can utilize it. Since we have our target, we had a target in 5 minutes, the buy side liquidity here, the buy side liquidity. when you have narrative of where price is going, so it will be able for you, it will be easy for you to anticipate price. Then through the price action, what is showing you, you'll be able to know where price is going. So when you see this kind of thing, here is consolidation, then we have the manipulation to deliver fill the inversion fair value gap. Then you can enter here, then put your stop loss here. If you are scared, you can put your stop loss around here. Then here, take your profit at this buy side liquidity. You just patient, you just have to patient for the thing to play out. It's not something that you enter, maybe you want it in maybe fast fast. No, you have to have patience for you to make all this move. Price, it will take in time to play out. You understand? It takes in time to play out. Yeah. Hope you understand what I just narrated now.
Yeah, it's little by little.
Yeah, sure. So let's go back to 1 hour. Okay, yeah, in 1 hour. So this is how everything played out in lower time frame. This pattern here now. Hope you see how we went down to 1 minute to see how price played out. That's how you trade. When you see such thing in a higher time frame like this, then you go down to lower time frame when it has filled inside this inversion for you to see a reverse pattern. It was consolidating when then we had a breakout that created a fair value gap. Then you can enter the fair value gap after breaking the high of the consolidation phase. Then at the fair value gap created, you can enter it in lower time frame. You can see where we traded now up to here to take the high. This is the high. This low formed the high. So we took out the low first. Then price went to seek for the high that created the low. Okay.
Yeah,
Yeah. So this is for inversion fair value gap for this. Then here is another inversion fair value gap between this candle low and this candle high. It's an inversion fair value gap. We violated it. We break, we trade and close above it. You can see it. Let's get the 50% of it. You anchor from your low to the high. Here is a 50% of it. The half of the inversion fair value gap, that's 50%. You place it at the 50%. Um, as consequent encroachment of the inversion fair value gap. Sorry. So here is the 50% of it. We violated it. We trade above it and close above. This candle trade out of it. So coming back to it, it will now stand as a support level because we have violated it already. You understand?
yes,
Good. If you watch, there is a fair value gap here too. There's a fair value gap here between this candle. After breaking out of the inversion fair value gap, there's another fair value gap here. This is my own, I discover in the chart. Any fair value gap created after a break of structure, like a breakout from a previous fair value gap or inversion fair value gap, or any fair value gap created before this consequent encroachment or after the consequent encroachment, I'm utilizing it. If I know where I have narrative of where price is going, if we are bullish, I'm utilizing it to wait for the candle to break the body inside it. You can see it's only weak that drop at the 50% of the inversion fair value gap. So you can enter here, then take your profit at the high, or here, your partials here. You can see how you traded. Any fair value gap created before like here, around here, or after a previous fair value gap, which is this, before we violated it, then I'm utilizing it. It's a high probability. Just it doesn't occur always, but once you see such thing, so you have to utilize it, make use of the opportunity. You have to have narrative of where price is going first. You understand?
Yeah.
Yeah, you have to have narrative of where price is going first. That's the first task. Where is price going? To withdraw on liquidity. Is it going up or down? Which liquidity is it going to take? So you have to start from your weekly chart down to your daily chart to see a liquidity, be it buy side liquidity or sell side liquidity. So with that narrative, you now come down to lower time frame to anticipate price. You anticipate price how it's going to reach out forth at the liquidity resting above or below. So that way you can able to make money while price is going up or going down, because you know where price is going. So when this kind of thing happen, you now know that you have to buy. Maybe you can buy here as you see this candle drop inside the 50% of the inversion fair value, because we have already violated it. So it's now standing as inversion fair value gap. So once price trade at the 50%, like this week you are seeing here, it was the body that dropped before it closed here, then left the week. Same thing with this, open, rally, then when traded up before closing. Yeah, the body closed here, open here, trade down, then before going up. You can buy, then put your stop loss around here. So when price move in profit, you can take your stop loss to your break even, the place you enter trade, to protect your capital and be on risk free, so that your emotion, because you don't trade with emotion, you just emotionless. You have to know it's business, it's a transaction. So you come, you win, you make money, you be content, you be happy. Then if you lose, you learn from your mistakes. Next time you come back, nothing more, nothing less, no emotion. You don't blame anybody, hold yourself accountable and be responsible for everything action you take. Nobody is coming there to push the button for you. So you be the one to push it. Okay?
Yeah.
Okay, that's good. So so far, is there any question?
Yes.
Okay, go ahead.
Well, how do I analyze markets and enter trade?
Okay, good. Now, if you have narrative of where price is going, that's the first task, to have narrative of where price is heading to. Okay.
I'm
Now,
not. I'm
yeah.
not. I didn't hear you.
Can you hear me now?
Yeah. Yeah.
I say first task is to have narrative of where price is going. Then time of the day. This market, it works with time, New York time. It works with time, New York time. Okay. So when
Yeah.
you have narrative of where price is going, it's more easier for you to analyze a market and enter. Like for instance now, you know this is an inversion fair value gap, and we have delivered inside it and see a pattern like this. Hold on. then and see a pattern like this: low, lower low that took off this high. Then knowing that we are going bullish because we have swept a liquidity here. Yes, was a liquidity. We have swept a liquidity and deliver into inefficiency, which is inversion fair value gap like this. Now it's your own duty to go down to lower time frame. Here is 1 hour. To go down to lower time frame to see price action, what price is doing inside this range now, to see a pattern or a breakout. You understand? A break of structure, because we are took out a sell side liquidity, deliver into inefficiency. So you have to wait for a break of structure to signifies to you that we are now about to reverse to seek for opposing liquidity, which is buy side liquidity. After taking the sell side liquidity, you will now see a fair value gap. When a breakout like the break of structure or a breakout from the consolidation phase, like I show you in 5 minutes. Let's go back. Hold on, sorry for that. Let's go to 5 minutes. So something like this. So yeah, something like this. Now you have seen in 1 hour that we deliver into inefficiency and we took out a sell side liquidity in 1 hour. So you come down to lower time frame, maybe 5 minutes, 1 minute, to see a pattern, a chart pattern like this. Now you know that this is a high. Here is a previous high. Then this candle took out this high here. Then we created a fair value gap. That will show you that this fair value gap is a starting point, a spooling point of a macro. That is a movement, a price movement, a macro. Macro is a price movement. So where are you expecting price to go and anticipating price? Is it not at this buy side liquidity? Since we have taken a sell side liquidity in 1 hour. So you anticipate price going to take this buy side liquidity. Here is a high, previous high here. So once you see this kind of thing happen, occur in the market and create a fair value gap, a breakout from the consolidation phase and create a fair value gap, it will now you have to know that price is pulling up. This fair value gap will push price. It's fair value gap that push price go up or down. So any movement you anticipating, it will always start in a fair value gap. Know that it has to start in a fair value gap or in a breaker. Like here is a breaker, like here is a breaker or other block. So when you see such thing, you can able to analyze your market. The price is going up here. You have to have narrative of where price is going. So this fair value gap here is where you can enter. Always enter inside a fair value gap. That's where you enter when you see something, a pattern like this. After a consolidation, here is a consolidation, the whole of this range. Then we had a breakout from the range, which is the consolidation phase. Then here is the previous high, last close candle inside the range. Then we have took it off. We now turn to our breaker, this whole candle. It now turn to our breaker. So any candle that is coming to deliver inside this breaker is not going to come lower. This breaker will now stand as a support level. I don't know, are you with me?
Yeah.
Yeah, this breaker will now stand as a support level. So any price delivering inside this breaker is an opportunity for you to go long, to buy. Then where do you take your profit here? You can take your profit here. This movement from here to here is a lot of money depending on your capital. You understand?
Yeah.
Yeah, depending on your size of account. This movement here is a lot, it can make you a lot of money, bro. You understand? So any price or candle inside here after this breakout, then created a breaker here. If any candle that is delivering inside it is an opportunity to buy. This is how you analyze your market. You have to analyze, you have to know that this is a breaker, that you have break out from the whole range, this range, a consolidation phase, back and forth, back and forth. So we have breakouts from it and created a fair value gap. So we are utilizing this fair value gap here. You can see, and this breaker. So if price trade into it, you buy, you buy long. Is that clear?
Yeah. Like if I want to enter trade now, like
Yeah.
just tell me how will I, so that if I'm practicing, I will know how I'll be doing it.
And
Like
you enter trade from your MT5 now, right?
I mean, like to get the stop loss and take profit, like where I will place them, like where I
Okay.
will get them.
Like
Yeah.
here now, here is a breaker. You can put your stop loss at this low, the previous low.
How do I get the stop loss?
This is how you get it. Did you see that line?
No, the arrow is not pointing again.
Are you seeing it? Hello?
Okay, it's pointing now.
Okay, good. Are you seeing this line at the low?
The black line, yeah.
Yes. This candle is the low. Is the low of all here. So what is the price showing at the black line? One point
1.3
three three, one, two,
to,
three. Good.
yeah.
That's what you will enter at the stop loss.
Yeah.
Okay.
Yeah.
Then take profit over here. What is the price showing?
The
Here.
arrow is not moving.
No, at this black line, the buy side liquidity.
The arrow is not there.
Are you seeing it now?
Hello?
Are you seeing my chart?
Yeah, I'm seeing it, but the your arrow is not moving. Is still at the sell side liquidity.
Maybe it's network. It's moving. Check. Is it moving now?
No, no, it's not moving. It's not moving.
Fine now. Is it moving now?
No, your voice is bridging now.
It's network. But you can hear me now. Hello.
Yeah, I'm hearing you now.
Is it moving now? Are you seeing my screen?
I'm seeing your screen, but the arrow is not moving yet.
Is my screen moving?
No, no.
Oh, I think it's hanging because I'm moving it here. Okay. So this is how you get your stop loss. Are you seeing my screen now?
I'm seeing your screen.
Yeah, you can put your stop loss here at the low. The price you are seeing at this line here, this low, that's the price you put on your stop loss on your MT5. Then if you are taking profit around this high, are you seeing this high?
No, no, no. It's still stable.
Is it stable?
Yeah.
Hold on. How am I going to? But let me log out and log in back.
Okay.
Then you to log out and log in. Let's see. You're just coming back. I'm not I'm coming. Go and bath. Ta. Mm-mm. Hold on. Yeah, bro, can you hear me? Hello. Hello. Yo, bro.
Your voice is breathing.
Yeah. Can you hear me now?